Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, August the 10th. The year's 2021. Let's talk trading. How to analyze a chart, part 10. These videos are for educational purposes only. Your results may differ from mine. Okay, maybe you're thinking, how much more analyzation can we do? But the type of analyzation we were doing on the other videos was usually based around looking for entries. If you think about it, it was also looking for targets. But when you're in a trade, you've got money on the line, unless you're demo trading, right? And so you want to look at, what we call price action. And so, we'll bring up a chart. It could be a 1 minute, it could be a 5 minute, depending on your, time frame. You just have to kind of look at the chart and decide how you want to, actually manage the trade. Now, the one thing, and this is one of the problems I have, is a lot of times when I'm in a trade, I'm not really managing the trade as much as I'm managing my emotions, the brain management. Because what'll happen is, let's say, for example, right here, you went long. And so the trade went up, and you had a couple pips, but you didn't take it. You were looking for the trade to go higher. The next thing you know, you come back, and then the trade comes back, and you're underwater. Because maybe you had an opportunity to get out here, you didn't take it. Get out here, you didn't take it. So that's like 3 times. So finally, the trade will pop up, and then maybe here you get out because you see it's price started to move down, so you get out. You say, okay, enough. And then what happens? Of course, price goes up, right? Or maybe just the opposite. Maybe you took a short here, and then it reversed on you, and then it came back down. As soon as you could, you got out. And then, of course, it keeps going in your direction. So, what do you do? Well, first, you have to have some rules in place that are almost etched in stone, so you don't really want to break them, because that way you won't get caught managing your emotions. You'll be managing the trade as the way the chart presents it. So what do I mean? So for example, if you've got a rule, you're in a trade, and so long as it's making higher lows, you're going to stay in the trade. So what happens here? Goes up, comes back down, but a higher low, higher low, higher low. Well, here it made a lower low, but you're in right where you bought. So you go, well, I'll stick in that trade. Or maybe you jumped out and you got in a second time. So here, higher low, lower low, but maybe you say, it's not really that much lower. It's bottoming out, and then here it goes, but actually most likely it's probably came down here. So somewhere around here you probably exited the trade, and then of course you see it returned, but you captured more than you would have beforehand. Or here on the lower lows, here it made a higher, actually in this case you'd be doing lower highs, and you would have been good to about this point. And then sometimes you just might have to say, okay, I got my 5 pips or my 10 pips or my 3 pips, whatever. You have to decide that. But you need to decide it before you get in the trade and not while you're in the trade. So, simple price action here. We've got higher, low, higher, low. Okay, now we're making a lower low. Maybe you get out of that trade. Or for example, right here, it just gave us a high or low trade to the short. So let's just watch this and see how it plays out over the next few minutes. So if you were actually in this trade with real money, you're thinking, okay, well, where's your stop loss? Your stop loss might be 10 pips away. So your stop loss is above this line right here, the Walmart line at 38.40. So you're thinking, oh, shoot, trade's not working out. But you can't think that way. You've only been in the trade a minute. And so now here it comes back your way. And you just sit and you wait. You don't get too excited one way or the other. And you're just kind of wondering, where is everybody? Why is price moving so slow? You might be thinking, I want those pips. Let me see something here. So now we've got a candle going the wrong way if we were short. So we just sit and we wait. Now it's come back down. Let's see what happens. So while we're in the trade, a lot of us just, let's see what happens. Let's see what happens. Now we're coming up in the last 15 minutes of the hour. And we notice here the H1 and above is red and M30 and below is green. So this is this hour candle. There was the open right there. And now it's taking off. So if you were short, and if you were just a pure price action trader, you go, hey, it put in a higher high here, and it looks like about an equal or same low. So you might say, you know what, maybe I'll just exit the trade quickly rather than seeing if it hits my 10 pip stop loss. Basically you're scratching out of the trade with what? Maybe a 1 or 2 pip loss. Because it's not working in your favor. Then again, you might go, nope, I've got my stop in place. I believe price is going to do what I thought it was going to do, which was come down out of that higher low zone. And so let's just see what happens. We still have a few minutes left. And a lot of you may have heard me talk about return bars and how price likes to return to the open of return bars. And that's another thing. If you know something like that, then make your trade accordingly. Because if you don't have your TP set, then you're basically flying, by the seat of your pants in the moment. There's nothing wrong with that. If you're willing to sit there with your hand on the button and you're living and dying by each and every tick. And once again, there's nothing wrong with that at all if that's your style of trading. but some traders might want to be a little more relaxed, a little more methodical in their plan, because so you can be methodical with your plan, but you also have to be methodical with your execution, following your trade rules, not just on entry. So as we analyze the chart, we've got higher low, higher low, higher low, made a higher low. So from this standpoint, price seems to be going up. So unless it breaks this level right here, on the downside, price is going up. And you can see here, this is, from the 30 to the 40, that's 10 pips. So there really wasn't much price action here. So what do we have? Maybe 15 pip range. Let's see, do I have that? H1 range 14, yeah. Oh, if you're wondering what the diamonds, that's the TRO, dynamic support resistance indicator, because this is using a dynamic support resistance scalper 2 to show trades, just in case you were wondering. So you can see we put in a higher high, the 3 ball moved over. But now let's see, do we get the break here? So I think that first we looked at it, it was at 34 if I remember correctly. So right now it broke through, so we're no longer making higher lows. So right now we'd be down about 1 pip from that original trade. So depending on how you like to trade, could have added on another trade here at the 36 level, and you'd be up a pip that on that trade, down a pip on the other, so you'd be about flat. And that's not necessarily averaging in, that's just taking the trade signals as you see them. So if you're trading a scalper, dynamic support resistance, or if you're trading a higher lows, lower high boxes, you just take the trades as they appear. And you can either think of them as an aggregate, or you can think of them as individual trades where you enter and exit them without regards to each other. Because what might happen is you might be thinking, okay, well, if this is going down and it keeps going down, I can make more pips, which is true. But if it doesn't and it reverses on you and you see a new 3 ball up here, now you're down on 2 trades, whereas on one you could have popped out with some profit. But once again, that could be managing the emotions. But if you have a particular plan, so here we've got a lower low, we got a lower high, so long as it's making lower highs and price is going down. So just, fastest 15 minutes in trading is just about up. So I hope that helped, analyzing the chart, looking at the higher lows and lower highs. And so when you trade, maybe you can put that in your arsenal. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.